Private equity considers a $20 billion bid for one of the oldest listed companies on the ASX. Housing takes centre stage as the political leaders crisscross the country ahead of Saturday's poll, and the tax office set to crack down on property and crypto investors. It's Tuesday, the 17th of May, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. Now, look, I want to jump in first here. We have a really interesting interview this morning.
We certainly do. I'm glad you jumped in, actually, because I was going to ask you about this one. I think this is the first time you have conducted an interview about cannabis on Fear and Greed.
Yes, it's with Bruce Linton, who's a non-executive director of Cresso Pharma, which is listed here. Bruce is an activist, a Canadian-based activist for cannabis, particularly for medicinal purposes, as well as recreational purposes. And he's just, a really fascinating individual, a great background himself. But just the way he explains how cannabis can help people and the uses it could have, I tell you what, it made me think differently. It's not an area I know a lot about, to be perfectly honest, but just talking to him about it, you do wonder whether or not at some point cannabis is actually going to be able to be used for purposes which are genuinely beneficial to people.
Yeah, and it's even just interesting listening to him as an entrepreneur, because his business that he originally started in Canada went on to become the world's largest listed cannabis company with a market cap at one point of more than $20 billion US. So, he knows what he's talking about. It is a very interesting chat, and he joined you from Canada. So it's definitely worth sticking around for that one. That's coming up a little bit later on. But Sean, the main story this morning, we love talking about, we love M&A activity. We love it when there's a bit of a deal frenzy going on, and there is talk of a very large potential deal going on, Sean. Pallet Group Brambles has held talks with private equity group CVC Capital Partners, sending its share price up more than 11%.
Yes, the board said the engagement was preliminary, incomplete, and there had been no formal proposal reviewed from CVC. Formal being the operative word there. The board also said that it was considering other strategic options. It came after the Financial Review yesterday morning reported that CVC was trying to put together a $20 billion plus bid. Brambles has been on the ASX for about 70 years. It started as a transport business for BHP, but bought the CHEP pallet business off the Australian government back in 1958. It's now the global leader in pallets. It makes about $2.7 billion a year pre-tax, but it hasn't been a great performer, although its recent performance is just a touch better. 20 years ago, it was trading around $11.60, which is about what it closed at yesterday. Mostly, it's actually traded under that level. Now, the bid price that's been speculated is more than a 25% premium to its trading price ahead of yesterday's rise. It sounds like there's been talks, but it's a long way from a done deal. Hence, the share price rose sharply yesterday, but didn't exactly soar.
Sean, I mentioned how much we love talking about M&A activity, and there has been plenty of private equity deals in more recent times, hasn't there?
Yeah, that's true. Outside the big super funds who often work with private equity, the PE groups have been among the most active buyers in the market. Sydney Airport, AusNet Services and Spark Infrastructure all went to bids which included private equity players. Ramsay Healthcare and Link Group are also under offer from PE consortiums. It certainly is a growing asset class, and big investors, including the Future Fund, are putting more and more money into private equity. In the Future Fund's case, earlier this month, it said it would double what it put into PE investments, purely on the theory that private equity beats share market returns. There you go.
Okay, speaking of markets, what happened on local markets yesterday?
The S&P ASX 200 closed up 0.25% to 7,093 points. Given the strength in European and North American markets over the weekend, it was, shall we say, a muted trading day. Industrials did best thanks to Brambles' share price. Tech stocks also did well, led by cloud accounting group Xero, which continued its better performance of late last week, closing more than 3% higher yesterday. The banks had a good day, mostly led by Westpac, which rose 1.6%. Fortescue Metals fell by more than 2%. while both Rio Tinto and BHP were off 1%. Macquarie Group, CSL, Wesfarmers and Woolworths were all underperformers. Logistics group Cube Holdings said it had successfully completed a $400 million off-market buyback, sending its share price up 5.4%. It was the best of the top 200 outside of Brambles. Lithium group Pilbara Minerals rose more than 5%. Some of the local coal companies are doing really well, Michael. Yancoal and Bowen Coking both hit record highs yesterday. Both are up more than 100% since late January. Nothing like a soaring coal price to help out. Cooper Energy lifted its profit guidance, sending its shares price up nearly 4%. On the flip side, biotech Imugene fell more than 5%.
And what about international markets?
Commodities are pretty interesting at the moment. Wheat prices are up 6% over the past 24 hours on the back of the war in Ukraine and an export ban by India. That, of course, is helping local producers. We were talking about that yesterday. Gold is heading down towards $1,800 an ounce, and Brent crude is trading just under $110 a barrel. Those high oil prices have helped push petrol prices in Australia to 6-week highs, according to the Australian Institute of Petroleum. The national average unleaded petrol price rose 5.4 cents a litre last week to $1.85.
Sean, what on earth is going on with diesel prices at the moment? This is me just taking the opportunity for a little gripe. I reckon it is impossible to find diesel for under $2 a litre at the moment. I find that just outrageous, driving a diesel vehicle and all.
Look, I don't have a diesel vehicle. I have no insight into that whatsoever. So I'm just going to let you gripe and leave it at that.
All right. Well, we'll just take a break. We'll come back in a moment with the rest of the day's business news, and I will be calm by then.
Great.
All right, Sean, housing is front and centre in the last week of the election campaign. And while both sides of the aisle are pushing policies they claim will make housing more affordable, some experts actually disagree.
Yes, Labor's plan is to help 10,000 low and middle income home buyers by taking an equity stake of up to 40% in the house they buy. They would then get that 40% back, 40% of the proceeds when the house is eventually sold. The Coalition's plan is to allow first home buyers to withdraw up to $50,000 from their superannuation to buy a house. The actual amount depends on how much people have in their super account. If someone has $125,000 in super, they can get the full $50,000. Critics point out that first home buyers mostly don't have that much money in super. Now, many market watchers have warned against these sorts of demand-based housing policies. When supply ain't increasing, and neither of the policies will increase supply, when supply ain't increasing and more people are trying to buy a home, guess what happens? Prices rise. It's economics. Superannuation Minister Jane Hume conceded that yesterday morning, but said it was only a short-term factor. Not so sure about that.
And what about the two leaders? What happened yesterday?
Scott Morrison was under pressure about whether he deliberately misrepresented to the US about whether he had fully briefed the Labor Party on the AUKUS Security Pact. Anthony Albanese came under pressure over when and if the ALP will put out its election promises costings. And both leaders are criss-crossing the country non-stop from Western Australia to northern Queensland down to Victoria. Very, very busy, those two.
Yeah, it gets a little bit frantic in the last week or so, doesn't it? And some of the minor parties as well, Sean, including the Greens, United Australia Party, a few of the independents, including Zali Steggall, appeared at the National Press Club yesterday.
Yeah, one of the big unknowns 4 days out from the polls is just how much power the crossbenchers will hold. When asked about that yesterday, only the Greens leader Adam Bandt responded, saying he'd never do a deal with the Coalition, and left it at that. Mr Bandt said the climate crisis has arrived and the Liberal and Labor parties are backing 114 new coal and gas projects around the country that would put people's safety at risk. Hence, vote for the Greens, he said. United Australia Party leader Craig Kelly rejected the net zero target by 2050 for carbon emissions, saying industries were being trashed. And Zali Steggall said the two-party system is broken and a federal anti-corruption commission is essential.
All right, Sean, we are getting closer and closer to tax time, and the Australian Tax Office has released its annual hit list of people and companies and activities that it's going to be keeping a very close watch on this year.
Now, property investors and cryptocurrency traders are going to be in the spotlight, and the tax office says it will be looking closely at poor record keeping and work-related expenses, given so many people split their time nowadays between home and the office. 1 in 3 Australians claimed working from home expenses in their tax returns last year. The ATO says people need to be honest. For example, they can't claim 100% of their mobile phone if they use it to call family members regularly. And the ATO said it has 3 golden rules if unsure about claiming a work expense. 1, you must have spent the money yourself and not been reimbursed. 2, if the expense was used to produce income and also for private use, only claim the portion that relates to the income. And 3, keep a record.
A lot of it's really just common sense stuff, isn't it, Sean?
It is, and it's amazing how many people don't follow the rules. It still surprises me, and people do get caught and they face big fines.
Yeah, absolutely. All right, moving on. Some big COVID numbers continue to come from Western Australia.
Yes, there were more than 12,200 cases recorded in Western Australia yesterday, the most of any state or territory. There were almost 3,400 in South Australia, 4,700 cases in Queensland, and almost 900 in each of the ACT and Tasmania. Victoria recorded 11,500 new infections, and New South Wales had a much better day with 8,300 cases reported.
Okay. Property leader Goodman Group yesterday warned that COVID-19 and geopolitical tensions are placing pressure on supply chains, lifting costs and increasing executing risks.
Yeah, the Goodman Group, which focuses on industrial property, think all those big logistics buildings in the outer rings of the big cities, was easily the standout performer during the pandemic. When shopping malls closed and people stopped going into the office, investors in real estate wanted property that benefited from the e-commerce boom, and that was industrial real estate. Goodman's is the biggest player in that market in the country. Goodman's share price jumped more than 60% from the start of the pandemic till late last year. But as the world slowly gets back to normal and e-shopping loses some of its lustre, not for you, Michael, but for most of us, so too has Goodman. Mind you, boss Greg Goodman upped the company's profit guidance for this financial year yesterday. The other factor working against Goodman and many property groups is rising interest rates. Goodman's share price fell 0.6% yesterday, but it's down more than 25% this year.
Sean, I don't know why you say it's only me that e-shopping is losing some of its lustre. But having said that, yesterday when I was speaking to you at one point, you had to head off and do the grocery shopping in person at the supermarket. Who does that anymore? It's called click and collect, or it's called online delivery.
But I have to sit down. I mean, you know, my household has many people in it, up to 10.
Yeah.
You know, that first, I have tried to sit down and do an online shop, but it's going to take me hours to do the first one. I know once I get the first one done, I just, keep buying the same stuff.
And plus, also with what, at times 10 people in the household.
I like getting out.
An hour and a half in the shops is actually probably a nice little breakaway for you, isn't it?
It's actually true. I put, music on and off I go and I just wander around and, I get to this checkout and I'm putting stuff through and I'm thinking, why have I bought that? It seems more ice cream than needed. But anyway, I quite like it.
Yep. Oh, well, there we go. So we are the perfect case study of someone who has fully embraced online shopping and someone who is clinging
Rejected it.
onto the old days.
That's right.
All right. Moving on, a few short stories. Sean, ASX Tiddler Step 1's share price fell 55% yesterday. Wow.
Yes, and even for a tiny company, that's pretty incredible. The underwear manufacturer listed in November last year. Yesterday, it said sales in the UK and US were slower than expected and pre-tax earnings would be about half what its prospectus said. The company listed at $1.53. Yesterday, it closed at 22 cents.
Ouch. I didn't realise that it was an underwear manufacturer when I referred to it as a tiddler. It just kind of sounds... That's not a word association that you really want to use there, is it?
Let's just move on.
All right. On the other end of the spectrum, Sean, cobalt and nickel explorer Galileo Mining jumped more than 55% yesterday morning.
That's right. It happened after small cap mining investor Mark Creasy upped his stake to 26% of the group. It was a record high for Galileo, and Michael just quickly shares an auto parts catalogue business Infomedia finished 29% higher after it revealed a takeover bid from Viburnum Funds.
All right, moving on to overseas news. Shanghai will begin a staged reopening from Monday as COVID case numbers fall.
Yes, though note that COVID hasn't been eradicated. Shanghai authorities were reported as saying staged reopenings will occur through to the end of June. Supermarkets, convenience stores and pharmacies will open from Monday. For weeks, the world has been hoping China would start to open up again after the imposition of severe lockdowns under its zero-tolerance COVID policy. Figures released yesterday show that retail sales fell 11% in the world's second-largest economy and factory output dropped 3%. That was worse than many people expected. The silver lining, maybe, is that the figures demonstrate the need for Beijing to relax its COVID policy. Australia needs that to happen because we need a growing China. Let's hope things continue to improve.
How about this one, Sean? Oil giant Saudi Aramco posted its highest profit since listing on the back of surging prices. This is a big, big company.
Very big. In fact, just a couple of years ago, it was the biggest company in the world. Now, Apple took that title as tech stocks boomed. But with the sell-off in tech stocks, Aramco is now the biggest company again. It's controlled by the Saudi Arabian state. It made a net income of nearly $40 billion for 3 months. Not bad.
Not too bad at all. Now, New Zealand isn't exactly one of the world's biggest carbon polluters, but the Ardern government has come up with an aggressive timeline to cut emissions.
It will spend close to 3 billion New Zealand dollars over 4 years to fund a range of measures, from electric car incentives to phasing out coal and helping farmers reduce methane emissions from livestock. New Zealand has a clean green image, and the government really wants to protect that. Fair enough. By 2035, it wants to have 30% of the country's light vehicle fleet electric and to decarbonise the public transport fleet.
All right. Now, up next, Sean, is the Fear and Greed Daily interview. And we mentioned this at the start of the show. You're speaking today to Bruce Linton, Non-Executive Director of Cresso Pharma.
Yes, we talk all about the cannabis industry, the opportunities, and we talked about this at the top of the show. Just a fascinating topic all round, and particularly the different uses of cannabis and different jurisdictions, why they allow it in some places, not in others. And Bruce, I would say, is probably the global expert on it, if not one of the top 10.
Yeah, absolutely. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Tuesday, the 17th of May, 2022. Make sure you're following the podcast. Join us online on LinkedIn, Twitter and Facebook, and have a go at listening to us as well through your smart speaker. Just say, play the Fear and Greed podcast. It is that easy. I'm Michael Thompson, and that was Fear and Greed. Have a great day.